in China podcast with me, Christina Kohler-Coluccia from Woodburn Accountants and Advisors. Our daily episodes on solving your China and Hong Kong business pain points are there to help leaders, managers, and entrepreneurs with the daily struggles they may be facing while setting up and operating in China and/or Hong Kong. We look at corporate administrative battles such as tax planning, incorporation, accounting, human resource, and labor, as well as cultural and language nuances that may make a daily business life hard. Our goal is to leave you with solutions at your fingertips. I hope you enjoy the episode.
The idea of today's presentation was really to organize with the CBBC certain events throughout the year about big insights that are happening to companies that are already established in China. And for the first one that I really wanted to touch on is looking at 4 different topics that are pertinent to this moment in time. One of them is year-end compliance. So we're going to be running through the timelines, deadlines, and actions that have to happen in order to fulfill your year-end compliance work so that you are still in good standing with the Administration of Industry and Commerce. We're also going to look at the extensions for individual income tax for foreigners, or as well as deductions that are being offered to local employees. So for those of you that have people on the ground, and use this opportunity to ask any questions you've got, right? There's no dumb question when it comes to China. Okay, so one of the things I had highlighted this morning was bonus schemes, and I will touch on that a little bit if you're not aware of bonus tax formulas and things like that. It's also looking at VAT. So the hot topic for 2023 has been the e-fapiao system. So I did want to touch on a little bit what are the developments there, what are sort of the restrictions that we're seeing from a bureaucratic corporate compliance perspective. And then last but not least, we're also going to look at expansion. Now, I know a lot of companies are hesitant about China, but I do still have clients that are looking to expand within the market, hire people that are in different locations, so not just in Shanghai. That might be pertinent to you guys eventually if you're looking to hire in other cities. Connie, that might also be for you as well. If you are based in Shanghai, based in Beijing, and now you have found a fantastic talent that is based in Chengdu, what are your options? Okay, it's not as simple as it used to be, where you can just hire people throughout China, and I will tell you what the restrictions are and what options you have on that. So when I talk about expansion, it's really hiring certain people, expanding your headcount actually throughout China. So we are touching on these 4 topics. I'm going to try and I have slides, but I would prefer to freely converse with all of you. And obviously, if you have any questions, please raise them. Also, these are the topics that I've put in here. But for those of you that are watching online, or also those that are in the room, if you have other questions, dilemmas that have come on your plate in terms of managing the subsidiaries in China, this is really the opportunity for you to raise them. The reason I was inspired by this is because I've had a lot of conversations also with other people not in this room, finance individuals in the UK who struggle to understand what their finance teams in China are telling them. They have a lack of transparency, they have a lack of clarity, and sometimes they just need to have a bit of a hand-holding and confirmation that what is being said is the right thing, right? So ask away. Again, there is really no dumb question. So everyone in the room knows me. No, I think I have to move this. No, or I can just click. Yes. I'll skip the first few slides. So the first topic I wanted to talk about was year-end compliance. This is a really hot topic for me and all of my clients that I have right now. We tried to get organized by the last week of October. So I am actually going to start writing dates because I want people to realize all the work that is involved in year-end compliance. So for us, I'm using this year as an example. We start warning our clients about what actions need to happen for your subsidiaries in China in October. Okay. The reason why is because a lot of decisions have to be made And we have the dilemma of all the Western holidays, as well as the Chinese New Year holidays. So everybody that is in this room will probably take off from around the 17th of December until the 8th of Jan, or 7th of Jan. Some of you might start on the 3rd of Jan. It depends if you have 2-3 weeks of holiday. China's still running. China doesn't celebrate Christmas or New Year.
So this is the compliance.
Yes, yes. Come on in. So it's just to stay with all the holidays, and since a lot of these decisions need to be made by the HQ, we want to get started by the end of October, or at least after the National October holidays, in case there's a lot of people that have to make decisions, right? So when we are dealing with year-end compliance, I want people to understand a couple of things. One, actually, there is no law in China that says you have to do an audit. And maybe some of you aren't even aware of that. Audits are not a requirement. However, it's a vicious circle, because when you have to do the annual compliance steps, it's an online form. And one of the first questions that pops up is, have you done your audit? And if you don't click that, the rest of the form doesn't pop up. So you're kind of tied into, you're not required to do it, but if you don't do it, you can't fill out the remaining compliance processes or fulfill the remaining compliance processes. Now, you could lie, right? And say you tick it and say you've got it. Actually, you don't. The issue then that arises is that if the tax bureau or any government administration asks to see the audit, you are in a bit of a tight bind, because you will be asked to submit it immediately. And if you don't submit it, they will ask why you don't have it and why did you lie then on the form. In addition, I personally just believe, get all your ducks in a row. You never know how your business in China is going to develop. You don't know if suddenly you're going to have to liquidate. You also don't know suddenly if you're going to be acquired. You don't know if you're going to add additional investors. All these various parties are going to look at the audit reports as a starting point. And if you don't have the audit reports available, again, you're in a situation where you're stuck. Last but not least, it's a fresh set of eyes on your books, right? We ethically don't do audits for our clients. We don't want to be part of that process. We would prefer our clients are outsourcing that to actually qualified CPAs who are looking over the books and checking that your books are regulated according to China compliance regulations, right? You want to make sure you've got a clean standing, a good standing within the government system. So having this fresh set of eyes is critical. Obviously, if you do plan on repatriating dividends, audit reports are a must. That is an absolute requirement. So just as a reference point, last year, because of COVID, we had kept all our finances and investment in China as a security measure. Last year, we decided to repatriate dividends from fiscal year 2018. We needed to show all the audit reports from 2018 onwards. And if we hadn't shown it, we wouldn't have been able to repatriate. Okay, until those books would have been audited. So there are a lot of very good reasons to get the audit done, but I do want to highlight it is not a requirement by law. Okay, so it is up to you to decide whether you want to do it or not. Now, there are very easy, 4 simple bureaucratic steps that have to happen for your annual compliance procedures. The key is deadline and the communication between head office and China subsidiary. And this is where it can be an absolute chaos. Everybody in China has the same fiscal year. It's January to December. So you can imagine for us, we've got around 50, 60 companies we need to organize to get all of these 4 steps done according to the deadlines, right? Booking in the auditors, making sure that we hit everything along the journey. Most of the time, the roadblock is with the HQ not making the decisions in time, and then they decide to do it after New Year when actually then China's shut down, and then we're not hitting the deadlines whatsoever. All right. So with these 4 steps, again, we outline the full process by end of October. And then we give deadlines to our clients because otherwise we can't cope. But it's also a matter of you internally creating your own deadlines and informing everybody who are decision makers on those deadlines. So December accounts, right? will have to be done no later than January 15th, because that is the deadline of the Q4 profits tax filing. So the first real big deadline is Jan 2024. I can put the date here, the 15th, because that's the tax submission deadline. Okay. In theory, that's when your Q4 reports have to be done. All right. Ideally, your year-end management reports should also be done. Okay, so if any adjustments are to be made, you really want adjustments for the full year to be done by that deadline as well, if you're truly organized. That's rarely the case. If I would give another deadline, I would really say that by 31st of Jan, 2024, and this date really depends on Chinese New Year. So I would say for this year, this is the date. We've given a deadline. Any adjustments have to be made by that date. Okay. Now, the reason I say that is because 10th of Feb is Chinese New Year. You're going to have employees who take more time off prior to that date, might take off more time after that, after the 17th of Feb. So if you don't have your own staff available to discuss things with, you're also going to be stuck. Don't forget also, by the 10th of Feb, your Jan reports need to be completed this year as well. So there's a lot of little pieces you have to kind of put into your network. All right. Normally in our situation, and it really depends on what your HQ requirements are, depends how many subsidiaries the HQ has, how big the consolidation work is. But the annual audit reports, we tend to start after Chinese New Year holidays. If you've got tighter deadlines, then that needs to be done in this period between the 15th and the 31st of January. And this is where you need to notify your team locally to book in the slots for the auditors that they come in this period. So if you say that consolidation needs to be done by end of Feb, then that has to be done in this period. Okay. If you're don't have strict deadlines or anything like that, then you can wait after Chinese New Year. So the annual audit report has to happen. Now, the tendency of, especially with smaller companies in China, which is currently the case with a few here that I know, there's not a lot of work. Okay. I mean, in theory, the actual working documents and the time spent by the auditor with the accountant will be less than a day, could be a half day. Really, if your transactional volume is huge, you might then need 2-3 working days. For smaller organizations where it's really expense oriented or very few revenue transactions, you're looking at one working day with the working papers. Then it usually takes about 2 to 3 weeks for the audit reports to be published. In China, there is no concept from local auditors for HQ to approve the audit reports. They publish the audit. It's not published within the government offices or the government bureaus. It's not submitted to them. But their expectation is that once they've issued their audit, there's no feedback from you. Weird, I know. And this is where then it comes to your own accountant to say to the auditor, listen, no, the audit is published. We need the HQ to read off on it, approve it. And if they've got queries on it, that we raise those queries. All right. The key thing to understand is that step 3, which is the profits tax reconciliation report. Basically, it's the annual profits tax filing, as well as the annual foreign exchange report. So you've got to understand these are 2 separate reports. One is in relation to the foreign exchange that has been rolling through your company. One is in relation to the tax that has been rolling through your company, profits tax. These need to be submitted by the 31st of May, 2024. Okay. So in the period from end of Chinese New Year is the 17th. From the 17th to the 31st of May, you need your audit reports to have been issued, approved upon, in order then the profits tax filing and foreign exchange reports to be done. The deadline is the 31st of May. That is the last date accepted for submission. Then the system closes and you can't log in. Generally speaking, the tax officer that is appointed to you will start calling the finance manager that is appointed to your company by mid-April to say, we need you to fill out these 2 reports. Please do it as soon as possible. They can't force you to do it earlier than this date. They like you to do it because you've got to imagine for them, they've got thousands of companies they're managing and trying to check off that every company does it and is remaining in compliance. Okay, so expect those phone calls, which is why, you know, all of that work has to be done within that period of time. Okay. Like I said, last date of submission is this date. Okay. The next step, once that is done, is step 4, which is the annual reporting to all of these government bureaus. So you've got the Administration of Industry and Commerce, the MOFCOM, the Ministry of Finance, the State Administration of Taxation, AQSIQ is the Inspection and Quarantine Bureau, the National Bureau of, hold on, I've actually got a slide with all the names. If you want a copy of these slides, please let me know, because it has all the data in there. The National Bureau of Statistics. And then you also have the Customs Bureau as well. Okay, so all of these bureaus need to be notified. If I go back to this sheet. Again, this is an online report, right? That is where they say, have you done your audit report? Have you done your annual profits tax reconciliation? Tick, tick, tick. The rest of the report then opens out. And you basically need to fill in data that comes from your audit report. And it's general statistical data. They will say things like, in 2023, what was the minimum quantity of headcount you had? What was the maximum quantity of headcount you had? And there might be variations throughout the year. That's why they say, what was the minimum? What's the maximum? All of this information is compiled into what we see nowadays as the statistics related to the economy of China. So they take all of that data that comes from your audit reports, all the data that is internal, and you fulfill that within these annual reporting guidelines. Okay. The deadline for point number 4 is the 30th of June. Now, both of those systems, so the online systems for profits tax reconciliation and the annual reporting, are actually opened mid-April. So if you do straight away 15th of April or 16th of April and you complete the report, you can immediately complete number 4 and then it's all done. So this is just the last date of submission. Of course, you can do it ahead of time. Okay. Now, the key thing why I mention all of these annual compliance procedures is because then comes questions from all of you about how do I get my money out of China? How do I repatriate funds? Can I do it through dividend repatriation and all of these other steps? So what's important to understand is then what is the system to get your money out once you've done all of this annual compliance steps, and what are the procedures? So in China, as you know, there's profits tax. It's unified at 25%. There are special rates for people if they're small, medium-sized companies. Under $1 million of net income, it's 3%. Between 1 and 3 million, it's 10%. So there are variations. Also, if you're a high-tech industry sector, you get special rates and all of that. But it's really important to understand that you need to have carried forward your losses. Losses can only be carried forward for 5 years. However, fiscal year 2020, due to COVID, is carried forward for 6 years. So the loss you made in 2020, you can carry that forward for 6 years. And then people aren't aware about reserve funds. All right. So let me explain what reserve funds are. If you have decided that your registered capital is 100,000 USD, registered capital, you are required before repatriating dividends that 50% of that goes into a reserve fund, which is on your balance sheet. There's no physical transfer of money or anything like that. You are just stating that we are reserving a cap of 50% of our registered capital that goes into this special fund. And we are telling the government that that money is there in case we go bankrupt, we get sued. There are these reserve funds available to utilize in those situations. Okay. So make sure you know what your registered capital is. make sure you know that the reserve fund is capped at 50% of that. And whenever you want to repatriate dividends, you take 10% of those 10% of that amount and you allocate it into the reserve fund of your balance sheet until it hits 50% of it. Okay. Any questions?
Do you have that anyway?
No, but I will tell you about it. Don't worry. That I can tell you. I don't have it written somewhere. But no, but it's on the slide. So I'll send you the slides, Leanne.
Oh, there it is.
Yeah.
Okay, that's it.
Okay. So please keep that in mind because a lot of people aren't aware of the reserve funds. All right. The other thing we need to be aware of is transfer pricing policies. And obviously this comes into play when you are looking at the annual perspective of your fiscal year. All right. Transfer pricing is something that really doesn't come into play that often when you're a small, medium-sized company. However, I want you all to be aware of what the triggers are. All right. There are certain triggers where your tax officer will come and say, we want to see the local file of your transfer pricing policy. These are the 4 triggers. Now, I've highlighted the last one because that's where people don't watch out for it. If you've got sister-related transactions exceeding 40 million RMB in a fiscal year, you have to submit that. You will be asked and required to submit that file. Okay, so please do track when you're doing intercompany management transfers, repatriation strategies, and things like that. If you are getting anywhere close to that number, start thinking about getting that policy in place. And it has to be a local file written in Chinese, done by then transfer pricing experts in the region. They're not asking for your company master file that has been done in HQ. They're asking for the local file. Okay. So please keep that trigger in mind. Now, when you want to repatriate dividends, there are 3 things that the tax officer will ask you about. One of them is, has your registered capital been injected? Have you carried forward your losses? And have you allocated in your audit report the statutory reserve funds? So this is another decision making that you need to think about, is when you know what your year-end management accounts look like and you want to repatriate dividends, your auditor needs to know so that he's putting that 10% into the balance sheet for your audit report, stated in your audit report. If you decide only by 30th of June, oh, actually, we want to repatriate dividends, your auditor has to redo the audit report, which is all feasible and doable. It's just going to delay the process. Okay. Now, point 1 about registered capital being totally injected is false. I have been able myself to repatriate dividends without injecting the full registered capital. If you've got enough net income within your bank account or within your P&L sitting there, you can create a board resolution, provide it to your tax officer as well as to the bank to state, we haven't injected all the capital, but we have enough funds that we want to repatriate it out. Okay. Now, keep in mind, when we talk about repatriation strategies, dividend transfer is the simplest and easiest. It's the most transparent process. It's very bureaucratic and takes time, but you will not get questions about service listing or contracts or anything like that. It is one of the easiest ways to get money out without complaints or back and forth discussions from tax officers from banks. Okay, so if you're struggling with management contracts or getting money out, my advice would be really thinking about bringing it out just as dividends. All right, just from a simple ease perspective. One of the things that you need to also think about is the tax impact that's going to have on the business, right? There is going to be dividends withholding tax when you repatriate. If you can take advantage of the current SME regulations where, you know, you're paying 3% on net income of less than $1 million or 10% between 1 and 3 million, then take advantage of repatriating dividends because the tax rates are so much lower when you accumulate everything than once you hit at 3 million and above. Okay, so if we're talking about strategy, management, repatriation strategies, really start thinking about it when you're earning 3 million and above in terms of net income. Prior to that, it's more tax advantageous doing it through dividends. So check your double taxation agreements. Now, as we're all from the UK, I just put it here for you as a reference point. You're looking at the last column. The dividends tax rate is 5% with the UK. The dilemma that you will run into is, I don't know your shareholders. Are they active structures? So if your holding company of the Chinese subsidiary has no commercial or economic substance, you may run into difficulties getting that 5%. Could very well be the tax officers say, we want to see the head count of that holding company. We want to see what transactions are running through that company. They can ask for it. If you can't show it, then you're going to hit the 10% instead of the 5%. Doesn't mean you can't repatriate. It just means you're going to have a higher tax rate. Okay. So these are all things you need to start thinking about starting in October, because it gets very tight in terms of deadlines. And again, if you need board resolutions and people signing off on things, we tend to always want to have that prior to the Christmas holidays. Okay. The outbound process. So I will explain our dividend applications. We are now end of November. I am still in the process with the bank to do 2022 dividend transfer. Okay. So fiscal year 2022, I still haven't made the dividend repatriation yet. And we're in November 2023. We started the process there. Documentation and everything, it's heavy. So it's not going to be a quick transfer. So obviously, if you need money in your head office, and then you need to do the repatriation strategies like trademark licensing fees and management fees and other things. Okay. Don't expect this to be a quick transfer. Now, why are we doing all of this? I don't know if you all have heard of the social credit system, but in China since 2020, they have the social credit system where basically they rank your organization in terms of bureaucratic administration and compliance, right? If you don't complete all of these steps and you don't do it in the deadlines that have been set, or you don't proactively ask for a tax exemption, extension, then you will have much lower ratings. You have to understand that people do background checks on you, especially if you're working with state-owned organizations. You go into the Ministry of Commerce website, type in the Chinese name, and generally it's all public information. Financial information is not public, but whether you are in good standing or have a good social credit ranking will be indicated there. It's what you call good standing here in I think in the UK when you look at a company. So be aware of this. This is a new system since 2020, and if you don't comply with these steps, you won't get that ranking. Okay, it can affect deals that you sign, especially if you're working with government organizations, because they will do that background check on you. Do you have any questions? No? Perplexed. All right. The next topic we're going to be touching on is e-fapiaos. So I do have slides here, but just explaining what e-fapiaos are. If you guys aren't aware, fapiaos are the paper invoices, official invoices that are used when you are selling a service or selling a product, right? You have to issue an invoice to your customer. That original invoice is called a fapiao. Okay, it's a Chinese, all Chinese printed document. Now, in 2023, there's been a massive rollout throughout China. All companies already established in China, at least in Shanghai, should now be on the e-fapiao system, meaning that your paper invoices no longer exist. Hurrah for all of us accountants, because now we don't have to deal with vouchering of those fapiaos and things like that, and we don't have these booklets that were really a nuisance. However, when we talk about e-fapiaos, it is still from an administration perspective bureaucratic, because although it's e-fapiao and it's electronic and it's a digital file, you still need to print it out and still file it in your vouchering system. But instead of filing a booklet of sheets, you now only have to file one piece of paper highlighting the total amount of the transaction and that. But you still have to file it, you still have to print it, you still have to file it. Okay. So I want people to be aware of that. In the old paper e-fapiao system, each sheet was worth a value. So you couldn't exceed that value when you printed it out. The value was around 10,000 renminbi or 100,000 renminbi. Hurrah, now with the e-fapiao system, you can put any amount on that e-fapiao. So it's just one e-fapiao with whatever amount. However, you still have a limit. So for example, what we've seen in Shanghai is you are either allocated in the 700,000 renminbi limit or in the 1 million renminbi limit, meaning that you can only issue e-fapiaos amounting to that, 700,000 or 1 million. Listen, it makes no sense to me why they have these limitations, because you would think that if you can issue more fapiaos, there will be more VAT and more tax payable, but that's not the case. So we are all hoping that eventually these limits and these thresholds will be revoked, but for the time being, you either are falling into the 700,000 or the 1 million. I don't want to generalize, but amongst our clients, what we've noticed is if you are in trade, you can get up to 1 million, a trade of product, you can get up to 1 million in the threshold. If you're service, it's 700,000. Okay, so there is that limitation. Be aware if you are signing contracts and you want to be able to issue the fapiaos, if the contract is 1 million and your limit is 700,000, it means you issue a fapiao for 700,000 in November and the remaining 300,000 will have to be issued in December. So it rolls off into the next month. Okay, so you need to be aware of these details. We are all yeah.
Sorry,
Yeah.
I mean, is that the total cumulative for the months you can raise up to?
Yeah, so if we take November as an example, I'm a service company, we have a limit of 700,000. I can only issue the total of 700,000 renminbi in e-fapiaos, but I can issue as many e-fapiaos as I like. But the limit is 700,000.
Does that include for both the domestic and the international?
Anybody. As far as the government is concerned, if you have a subsidiary in China, it doesn't matter who owns it, whether it's owned by a mainland Chinese or whether it's owned by a foreign invested company. Yeah.
And do you have to use e-fapiaos by law?
Do you have to use them? Yes. Accounting doesn't work in China without the fapiaos. Yeah. So if you use Excel, so every company might have a different policy. I can use Woodburn as an example. For us, when we transact with a client, we actually will issue an invoice in Excel. We've PDF'd it, send it to them. Only once we receive payment do we then issue the e-fapiao to the client, right? I can also say, I'm going to issue the e-fapiao straight away to the client. I have clients who don't pay me on time. And the minute that e-fapiao is issued, I'm liable for VAT. So if I have clients who don't pay me 6 months, for 6 months, I am behind on, it affects my cash flow, basically, right? But e-fapiaos are a must in China. You don't do anything without an e-fapiao. The transaction is considered illegal. And that's the same with suppliers, right? If your supplier doesn't give you a fapiao, that is not a recorded transaction. So I'll give you where this is the most common is if you rent office space or if you rent a house, an apartment, you will always find that your landlord says, do you need a fapiao? I can give you a lower price if you don't need it. It's because he's not going to record the rent that you're paying, right? But if you're an expat who needs reimbursement for the company, you need that fapiao. The company can't reimburse you without it, right? So it is.
But sure, there's transactions higher than 1 billion.
So if you have transactions of higher than 1 million renminbi, what you can do is go to the tax officer and say, I've got this contract, and you've got it, right? It's worth 2.5 million, right? I need now a plan once I receive payment, or I don't know what the plan is with the customer, right? In terms of issuing the fapiaos, at what point do you issue? When I get payment, I need to be able to issue it. I need you to give me an extension or increase that threshold for that month that I have the ability to do it. So there might be a bit of back and forth negotiation, but you can do that. It just really depends on how many of those contracts you have. If you can show a track record of 3 to 4 contracts of higher value, sequential months, they might give you a higher threshold. And I say might because it's not me who decides, right? You have to negotiate with them and see what comes up. You will find that some tax bureaus are more lenient on this and some are more rigid. And, you know, they won't go up to their higher authority. And again, it doesn't make sense to me because you would think the more that you issue, the more money you get, the more taxes you pay, not only in VAT, but also profits tax, right? But there is this threshold still. Do you guys have any questions? Again, there's no dumb question when it comes to this topic. And e-fapiaos are still a very, very new system. Everybody is getting their head around it. Even the tax officers themselves.
I'm trying to think about the motive of this limit set.
So there is a black market in China of fapiaos. So the booklets, so every fapiao has a code, right? And they were tracking all of the paper fapiaos by these codes. And one of the things that we do when we get reimbursement of expenses from employees is we make sure that it is a valid and true fapiao because there's a black market for it. And you can go into the State Administration of Taxation website, type in the code of that fapiao, and up on it, they will say who owns it, right? And in theory, if you've had lost your paper fapiaos, you should have reported it, right? That they can track it and you pay a penalty on it. You pay a penalty because you've lost it, right? And usually it's the value of the sheet. So I had a client once who was liquidating in China and he lost the booklet and the booklet had 25 sheets, each one worth 10,000. He had to pay 250,000 as a penalty. So, I mean, these are things, you know, this is why they say you have to have a safe in your office. The fapiaos need to be in that safe. You need a standard operating procedure of who takes that. Now that it's all online and within the VAT system, you don't have this trouble. I think they're trying to eliminate through the system that there are these fake fapiaos that are running around the country. Any other questions? Is there anything coming online? No? Okay. All right. So this is just an explanation on what e-fapiaos were. It's easier for me to explain what's happening on and the trends of it. Now, the big topic for this year, especially for foreigners, has been the individual income tax deductions. Now, I don't know if you've heard about all of this in the past. Basically, do you remember what it was, Chris? 2019, I believe, 2019. The government suddenly came out and said, we want a fair playing field for foreigners and Chinese in China. Foreigners no longer get any tax deductions anymore. And there was a big discrepancy between foreigners and Chinese. The foreigners could deduct a lot of things that the mainland Chinese could not. So in 2019, they came out with this regulation saying that over a certain period of time, this will stop. It caused a lot of drama because as you can imagine, the expatriates that were in the market were like, listen, guys, you sent us over here. I want to still receive my net pay. Right? So it suddenly became a discussion and a negotiation with their HR department saying, listen, you have to gross up now. I'm not going to be responsible for this new regulation. And then, of course, there was a lot of discussion saying, oh, the Chinese now want to remove foreign companies and they don't want foreigners on the ground. Listen, I have a positive mindset on this. I don't believe that. I think really what they wanted was to create a one system policy for whatever nationality you are, whatever color face you have, that there is one individual income tax policy. All right? Because there's already so much complications and old-fashioned systems within the tax system. Now, they have come out, and I believe it was summer, if I'm not mistaken, or right before summer, they came out and said that this is now going to be extended until December 31st, 2027. So until December 31st, 2027, foreigners will still be able to retain these deductions. In addition to that, there are still deductions that are being offered to all people, local as well as foreigner, and they've increased those. So it's good for everybody. It's been a win-win situation for everybody. I just wanted to highlight here, because maybe you don't know, generally this is how salary packages are made up in China. You've got a base gross salary, you've got social insurance and housing fund, commissions, bonuses, allowances are voluntary, okay? Our company had a policy, when I was living in Shanghai, I was not the only foreigner that we hired, where we basically said no allowances were being offered. You earned a gross salary and you did what you wanted with that salary. Whether you wanted to pay rent of 5,000 or whether you wanted to pay rent of 50,000 was up to you. But the company was not going to reimburse you for these allowances. As such, we were evil because we didn't allow our foreign employees to make any tax deductions. Okay. I don't think there's a right or wrong with these tax deductions. I think it's what a lot of the foreigners are still expecting, that you give this to them, but it's up to you whether you actually want to do it. It's not a law. There's no Chinese law which states you need to give foreigners and expats deductions and allowances. Okay, it's up to you to decide what that is and how that looks like. So special deduction items are things that are being offered to both Chinese employees and foreigners. And this is the list. So you've got nursing expenses for children under the age of 3, children's educational expenses. So all of these items, including housing rent, can be offered as tax deductions to both Chinese and foreign employees. Again, it's up to you whether you decide you want to do that or not. Okay, nobody's forcing you to do it. It depends on your own internal company policy. All right. There are, however, limitations of how much they can deduct. Okay, that's the next slide. So as of August 2023, when you have nursing expenses of 5,000, you can now deduct up to 2,000 per child per month. So the other 3,000 is not tax deductible, only 2,000 is tax deductible. Children's education has been raised to 2,000 as well per month. Supporting the elderly has also been raised to 3,000 per month. Okay, so on these special deductions, there are limitations, and you need to be aware of what those limitations are. Most important thing is, if you are offering these, it has to be written in the employment contracts. If it's not written in the employment contracts, it will not be accepted by the tax bureau. Okay, so that is fundamental. For foreigners, it looks like a very similar list as the other one. All of these expenses are exempt. So that means housing allowance for foreigners, there's no limitation. There's no threshold. The full amount is deductible. Meal allowances, deductible. Laundry expenses, also deductible. Some people do say, and again, if these are not mentioned in your employment contracts, not deductible at all. It has to be mentioned in the employment contract. There is no law which states how much of your total compensation should be allowances. The rule of thumb is don't do more than 2/3. So if your compensation is 100,000 RMB per month, don't go over 70,000 RMB in expenses. Right? At least 30% should be your base salary. And what is then fully taxed is that base salary of 30,000. Okay. In addition, coming back to your e-fapiao question, if your employees do not collect the e-fapiaos for these expenses, the same for the special deductions, there is no deduction and there is no allowance. So the e-fapiaos must be the supporting documents for all of this.
Sorry, Christine.
Yeah.
You said not over 1/3 or 2/3.
2/3.
2/3.
But again, that's my rule of thumb. It's a rule of thumb. Doesn't mean that every tax officer won't question it. Right?
Can I ask a question?
Yeah.
And I'm just trying to work out obviously what we're doing.
Yeah.
So this is paying employee expenses through payroll. Sorry, I'm just
Paying allowances.
paying allowances, but okay, so then they still gotta give receipts for.
So Joanne, you have locals only.
Yeah.
So the locals will have these expenses, right? They might have these expenses. For each of these items, there's a threshold.
Yeah.
As of August, the first 3 have increased in terms of the threshold. They can have those as deductions, but they need the e-fapiao. So if they are bringing their kids to a nursery.
I don't think any of us are doing this, probably where I'm a bit like.
Okay.
I'm looking, I'm just opening the payroll file, there's nothing in there, so
Okay.
I'm just,
You could. I don't, you know, if you wanted to.
yeah.
One thing that I want, again, I'm just going to reiterate it because people think that an email is okay. You cannot put, the taxpayer is not going to accept an email which states the allowances. It needs to be in the employment contract. Okay, so emails, random scraps of paper does not work at the tax bureau. If you're going to offer any of this stuff, it has to be properly done in the employment contract. All right. Okay, and then now I want to touch on the expansion if you're looking to hire people. So can I turn that over? Wow. That's paper. Oh, can I do it like this?
Yeah.
That works. I'll try just using one.
Maybe.
Maybe just using one.
Yeah.
So just to highlight what I mean by expansion within China, all right? Usually, and I use Shanghai as an example. You've all, not all, you have set up an entity, a subsidiary in Shanghai, all right? Now you've hired, I don't know, 2 people based in Shanghai and everything is hunky-dory, all right? But now you want to expand, you want to increase your headcount, and you also might realize Shanghai might not be the right place. Actually, we need somebody up in Beijing, we need somebody in Guangzhou or Shenzhen, and you start saying, okay, I need in Guangzhou 2 people, I need in Beijing 1 person, I need in Chengdu 3 people. I'm making stuff up. This is all hypothetical, okay? In an ideal world, you would be able to handle all of this payroll from your Shanghai company. Unfortunately, that is not the case in China. They like to complicate things. What we don't want to do, and I'm totally with all of you on this, what we don't want to do, which is actually the proper formal way of doing this, is we don't want to set up a branch office here for just 2 people, a branch office here for 1 person, a branch office here for 3 people, to then do for each of these subsidiaries, accounting, tax, administration processes, right? If we're all finance people in here, that's probably our worst nightmare for this amount of people, right? So what are the options? Not much, unfortunately. Now, the regulation is this. Unfortunately, social insurance and housing fund has different rates depending on each different city. So the way that you would look at a salary breakdown of your 1 staff in Shanghai earning 20,000 RMB will look very different from a Guangzhou staff based in Guangzhou with a salary of 20,000 RMB. And when I say very different, it will look very different from the perspective of the social insurance and housing fund calculation. Okay, and that's where the differences lie. Social insurance and housing fund rates are dependent upon the standard of living of that city. Shanghai and Beijing are one of the highest. These are going to be cheaper. Okay, in terms of rates. And that's also why people want to expand, is they know that the salary packages are going to be cheaper in other cities, right? If we hire somebody, an accountant, for example, in Ningbo, they are going to be cheaper than an accountant in Shanghai. All right. So you have a couple of options. One is you set up the branch offices. I don't recommend that. A simple option is that you are very clear in the recruitment process. I want to hire people in other cities, but they need to go on the Shanghai payroll and they need to receive Shanghai social insurance and Shanghai housing fund rates. Okay. Why would somebody not want that? An individual may not want that because they have purchased a property in Guangzhou, and in order to get the housing fund, they need to have it in Guangzhou, not in Shanghai. Okay, so generally, if you are owning the property, they will say, no, I need to be hired by an entity in Guangzhou because I need my housing fund to keep going here because I have purchased a property, I have a mortgage, and the housing fund is contributing to that mortgage. Could also be that they have children in Guangzhou, or they have their elderly parents in Guangzhou, and through their social insurances, they're contributing to their medical care, and they're based in Guangzhou, and hence they need the medical care to also be in Guangzhou. If you're looking to hire millennials, they really won't care, and they'll be happy to just go on the Shanghai Social Insurance and Housing Fund.
How common is home ownership? So do most people rent these days? Or
Sorry.
do most people rent, like, or the younger generation? So
Mm,
when you're talking about.
I mean, Christina, I mean,
Ownership's still quite high.
I think ownership is still quite high, at least historically it has been. And they might own more than one property. It might be that they own 2-3 properties. It really depends.
I've got no idea what they do.
It really depends.
Europe, a lot of
Could also
rents,
be that you have
yeah.
somebody who lives with their parents and therefore they don't care,
Yeah.
right?
I wish I could rent.
What's the housing fund for? What is it?
The housing fund is to help people to buy. And it contributes to the mortgage and the purchase of the property.
I mean, the reason why it's so high is because historically private property wasn't a thing. So then when they brought in concept of private property, the state basically reallocated the state assets to individuals.
Right.
So actually house ownership is quite high because it was previously the state had just given it to you.
But you still had to contribute.
Yes, but in terms of the ownership.
Yes,
it's comparatively high.
I mean, ownership in China is only for 49 years, 49 or 50.
Something like that.
It's, let's say 50 years.
Given rather than purchased.
Or let's say you didn't have to pay a down payment.
Right, got it, done, okay. And then they pay from that point.
Yeah.
Okay.
And it's almost like a rental amount. Right. And it's not for foreigners. This is not applicable to foreigners. So don't get, I mean, it's not that you're now immigrating to China and you want to buy property. Yeah. So in an ideal scenario, when you are recruiting somebody, you need to be open and transparent with them. Otherwise, you're going to lose a lot of time in the recruitment process, not telling them that they actually have to go on the Shanghai Social Insurance and Housing Fund rate. It is going to make it difficult to recruit people. It's just a simple fact. Now, one of the things is that a lot of employer of record companies are setting up branch offices in other places. CBBC is one of them. So CBBC has done it the formal way. I think, how many offices do you guys have?
9.
9 offices in China. And the beauty is, if you are looking to hire, I don't know, somebody in Wuxi, they have an office there and they can hire that person under their Wuxi entity. The person gets the Wuxi Social Insurance and Housing Fund rates. But you could sign the agreement with their Shanghai company, right?
It's actually a contract with the UK.
Would be with the UK. So that's a downside because you wouldn't be able to put the whole payroll under your Shanghai structure.
I think.
Yes. Does that make sense? But there are also some local companies now that I've also spoken to that are in really very weird places in China to get traction on this, where you can sign with your Chinese entity, so your Shanghai company, and then hire those people.
Is it like an agency then? So you just like
It's
hire them as almost like contract?
No, you're not hiring them at all. The employment contract is with the agency. The agency is the employer of record.
But you're hiring from the agency.
Yes.
That's right.
You're servicing, you're requesting a service from the agency.
Okay, that's where.
Yes. So just keep that in mind. Currently, and I will vocalize this, but I know it's becoming obsolete. There are payroll providers who are still offering the service where you have a Shanghai company, that payroll provider has an office in Guangzhou, and they can just do the social insurance and housing fund in Guangzhou. So you're still paying the net income to the person. It's just the social insurance and housing fund is actually, Guangzhou is a terrible example because that's not allowed. Ningbo, Nanjing are places, and Hangzhou are still places where it is allowed.
Why are
Okay.
they phasing it out?
Because it's not proper, because the person is actually employed by Shanghai, but social insurance is Ningbo, and then it's again a complicated system. Why they're phasing it out, I don't understand, because it's not It's not helping anybody, you know. Companies don't want to set up branch offices. I spoke with a gentleman out of Qingdao. He wants to hire a guy, I think Ningbo is one of them, and another one, I think maybe Chongqing, very much out in the West. And he's in a situation where he wants these two guys, they're the right fit, but they don't want to be hired by Qingdao. And he's like, I'm not going to set up a branch office for one person and run it and maintain it. The board in Europe is never going to say yes to this. They'll say, find somebody else, right? So the solution for him has been using this agency to act as that employer of record, and it's a different agency in each of the cities because they have to be hired by that entity and structure. So it's not, you know, this is all really not perfect solutions in any shape or form, but at least there are solutions. So if you are looking for people in other cities, sorry, it is feasible. Okay, and everybody is trying to do this because they know that salaries are going up in Shanghai, salaries are going up in Beijing. It is cheaper to find certain people in other places, or alternatively, you've got a client or supplier distribution network in other cities, and you don't want somebody traveling from Shanghai, you just want somebody who's located there. Yeah. So that's just a bit of background on social insurance and housing fund and what is an actual requirement. Okay. To finish off, I thought I would just recommend a couple of things to think about from an employment perspective. One thing that I did not put here as part of the deadline, because it's not a company obligation, it's an employee obligation, is that by the 31st of March, all employees earning more than 10,000 RMB a month, so 120,000 a year, are required to do their own personal income tax declaration. As foreign investors, I want you to be aware of this obligation. You are not in any legal right to do anything. I think you should just remind your staff to do it. You can't also verify that they've done it. I mean, you have no right to ask them whether they've done it, but it is something to protect yourself, that at least in writing you've said to them, hey guys, the individual income tax obligation is 31st of March. Have you done it? Just want you to be aware about it. And if you're stuck, we can get you resources to teach you how to do it, right? Just in case.
Is there any repercussions on you?
No,
No, okay.
no,
Don't
but
want
but what we don't want is that there's repercussions on your employee who then somehow brings you into the mess, right?
It's 20,000 RMB.
It's 120,000 for your annual, if you earn more than that. Yeah. So just think for the year end, right? I don't know what your internal company policies are. I don't even know whether you have internal company policies, but you know, you're looking at your employees, you should think about it as well as on a fiscal basis. So has everybody taken their annual leave? Have they taken sick days? Are you tracking that? Can annual leave be taken into the following year? Is there a deadline? I know my husband's company has a deadline of March 31st that he has to take those days off. Every company has different policies. So as we're nearing the end of the year, try to track those. Try to understand if people need to take off, they don't need to take off, what can be extended, what can't be extended. If you are using payroll agents or labor dispatch agents, I have just done an internal audit on my own company to make sure all of our employment contracts are up to speed. Does anything need to be renewed? Are there renewal dates? I would recommend doing a little internal audit on all of your employee documents. So do you have passport copies? Do you have Chinese ID copies? Do you have the contracts or at least scanned versions of those? Looking at annual leave dates, sick leave dates. Was there maternity leave taken this year? Things like that. Just do a little bit of an internal audit. If things are missing, ask your staff to supply them. If you need clarification on things, this is now the time to do it with your staff, right? To also then think about next year, right? Do you have recruitment plans? Are you planning on hiring more people? When we are in startup phase and we start with one employee, it's really easy. Somehow when the second one comes, we don't actually have a written standard operating guideline.
saying we need X, Y, and Z from you, it becomes very ad hoc, and then you're not matching things from one employee to the next. Or you say to one staff, you get 15 days annual leave, and then you tell this guy, no, you only get 5, and there's no cohesiveness with what you're telling people. If you don't have that type of internal policy on holidays, business trip expenses, things like that, something to start thinking about and implementing now for then fiscal year 2024, that you have order and organization in place. And I know a lot of people don't like doing this. I think it's a great use. We do surveys with our employees. What do they think of us? What could we do better? It's like what you would do with your clients. Ask your employees, are they happy? Is there something that you need to change? Now is also now I think about it because I asked this question this morning. Do you pay 13-month salaries? There's no obligation in China to do this. Check your employment contracts if you are. Bonuses. Bonuses have special tax formulas that are still applicable. If you are giving bonuses to your employees, these tax formulas are only valid for one transaction, one bonus. So understand when that's going to be paid out, how you're going to make that calculation. Are there going to be salary increases for 2024? How are you basing those increases? Are they based on, well, we do our increases based on Shanghai inflation rates. So that is the guideline.
What has been the inflation? I haven't looked it up.
So last year it was 2.1%. Yeah. And I look at Shanghai because that's where my staff are based. I'm not looking at all of China, just to clarify. Different cities will have different inflation rates. Yeah.
I think next year will also be quite low, 2.2.
Yeah, I mean, from what I've looked now, it's been ranging between 1.9 and 2.3-ish. So I look at December 31st and then I see. But I do increases in April of every year. So I also look at the performance of the company. Have we done well? Have we not done well? Inflation rate is one component I look at and I try to abide by it. But if we've done rubbish, then there's nothing. Right. I will say most employees in China, everybody loves a bonus, but they're actually more concerned by salary increases. That's what they're aiming for.
So earlier you mentioned about this 120,000 threshold.
Yes.
Does it apply to just the basic salary or is it total gross inclusive of the bonus and allowance?
Everything. Yes. So commissions, bonuses, not allowances. No. Commission, bonus, the actual money you get, right? It's not based on allowances. Which is why the e-fapiaos are so critical, because when they don't collect the e-fapiaos, that money goes into your gross salary. And then you pay individual income tax on that. So it's also not including the social insurance and housing fund. Yeah. I think that's it. That's the end.
Excellent. Are there any questions?
If you guys have anything that is popping up for next year that you also want clarity on, now's the time as well. Okay. From an administrative perspective. I know you don't know what you don't know.
Yeah, my questions aren't about admin. It's more, and not even about any of this. It's more about, rather than getting funds out, it's how do you get funds in? So it's completely different subject. And
No. But this is a dilemma also. So this is a dilemma also for a lot of people, is how to get money in.
Or how do we access funds in? Because if we want to expand, is there anything locally, or is it all how we do it from a foreign entity in? Because that's our challenge, rather like be great to have a problem trying to do we repent.
So to get money in, obviously the easiest way is through registered capital, right? That's your working capital. That is, and there's very tight guidelines here where they have to generate revenue versus using that. Registered capital is actually your working capital. You are supposed to use it for your expenses, okay, to start up the business. Obviously, at a certain point, that money will run out. The beauty of registered capital is it comes in tax-free. It is your working capital.
Downside is it's your liability as well. You are liable up to that amount. In addition, you have to put money into a reserve fund capped at 50% of that, right? When you set up a company, you have registered capital, which is the money physically coming in, and then you also have a total investment amount. Now, according to the latest foreign investment law, you haven't needed to put in this total investment amount. There's a difference. There's a ratio. If I very simply use very simple numbers, if your registered capital is 70,000, your total investment would be 100,000. The difference is 30,000. Okay. The 30,000 is called your foreign direct loan. That amount never has to come into China. This amount has to come into China, and it has to come in within the validity term that you've chosen. So you've chosen a validity term of 50 years, you have 50 years to put that in. Okay. If you've chosen the minimum, which is 10 years, you have 10 years to put that in. Once this is all used up, you can decide to use that. There are some companies that have been incorporated where the registered capital and total investment match. So 70,000, 70,000, and then they have no foreign direct loan available to them. I always think when you're setting up your company, make sure, or even if you are set up now, this can all be changed. Okay. Make sure you've got this, because I call this emergency funds. You never know when you need them. And again, this can come in interest-free. This can also be paid back very easily to the head office. Downside is you need to open up a separate bank account for this, which can take 25 to 30 working days, and the legal rep has to show his passport. Okay. So option one is the 70,000. Once that's out, you've got this option left over. How else can you get money in? The issue is that you need to create agreements that are authentic and real, right? You need a reason why you want to bring money in. And unfortunately, you can't say that it is to cover operational cost. And that's, I was mentioning this morning, actually, at a meeting. I have a client who wants to do exactly that. They want a service agreement, and they've written, we want to reimburse operational costs. Tax Bureau and bank have not approved that. So they've had to outline services that are semi-true. One, the business in China is there to do business development and marketing. That is what the team is. That is the title of the people, is to do business development and marketing. And for any deal that is generated, they're repatriating funds, right? Downside is that when the money arrives, the bank is requesting to see the original contracts, the direct contracts between the UK and the clients. So you've got BD people in China going out and meeting clients, generating contracts that are direct with the UK. Those contracts have to be shown to the bank to prove that this money is coming in for those reasons, right?
Bank, not the tax bureau.
To the bank, to the bank, to the bank. The tax bureau couldn't care less. They're like, you're going to pay tax on it anyway.
The banks are more paying, like, you have to do all
Yeah.
that paperwork.
So a lot of you might not be aware, in 2023, the banks have become extremely rigid and strict in China. Pain in the butt, rigid and strict. It is painful, really painful. To the point where even there have been moments myself where I just didn't think we're going to get our, I don't think we're going to get our money out. And it concerns me. Why are they doing this? Is because they've been given strict instructions from Beijing, make sure there's no money laundering that's happening. So any overseas transaction in or out, we need verification of why they're doing it, what are the reasons, and we need all the supporting documents for every single transaction. It is painful, really, really painful. So as long as you can provide the supporting documents, the money's going to be released, right? So to get the money in, that is the simplest method, is trying to figure out what are your team in China doing, looking at their titles, creating a service agreement that matches that. Are they doing quality control? Are they a production team? Are they the BD sales? What are they actually doing? Are they technical service? Are they doing installation of equipment? Whatever it might be. And then creating an agreement around that service. And that's where you also have to then think about transfer pricing.
right? Don't make it so obvious that you're invoicing the exact cost that is required by the company. Adding a little bit of a margin on top will always be helpful.
We do have a question.
Yeah.
So I have a question about TP. It is based on tangible goods, RMB 200 million. My company provides services. Is there a limit on that?
No, that is the limit, is the 200 million RMB.
Okay.
I don't know if that answers the question. I can go back to that slide. Okay. Yeah, oops, there. So they're offering tangible goods of 200 million between sister companies. That is the threshold. That means you have to start thinking, if you're hitting that target within the fiscal year. So this is just for the fiscal year, right? These are targets between January and December. They're not looking at the whole period of the company since establishment. So it's transactions of 200 million RMB for tangible goods between January and December. If you're hitting that, you have to start thinking about preparing the local file.
So the company provides services. Is there a limit on that? And do they
Oh,
go
not goods.
services? Yeah.
Then the 0.4 is related to services. It's the intercompany related transactions of 40 million RMB. If they're doing more than that, then you need to prepare your local file.
Another question, sorry. Do they go by sales revenue if it's 200 million RMB?
For goods, but you service.
Services, yeah. Sales revenue. I can see if see if they can get. See, I've asked him to open his microphone.
Oh.
Hello?
Hello, hi. Hello, can you hear me?
Yes, I can hear you.
Hi, Christina.
Hi.
It's Raj.
Oh, hi, Raj.
Thank you. I just have a question about the transfer pricing, which I didn't know. So based on your point number 4, sorry, I just can't see it anymore. Questions. If
Any
it,
type of related party transaction exceeding 40 million RMB.
yes, so they will judge this by quarterly VAT return. So whenever we hit 40 million, that means tax authorities might ask if there is a contract in place.
No, they're going to look at that when you do your annual compliance, because as part of the annual profits tax filing, there is a question on sister related transactions and the amount of business that has gone between sister related companies.
Okay, and so the contract needs to be in Mandarin between headquarters and the subsidiary in China.
All contracts related to your Chinese subsidiary have to be in Chinese as a base language. The English is for internal use.
Okay, so okay, that's fine. And last question. How do I say this? Yes, so for example, do they question how the transfer pricing is worked out, or they just make sure that there has been margin charged on every single transaction?
So if they're asking for the local file, they will want to see your formulas and the reasoning behind it.
And when you mean local file, what does that mean?
It means the local transfer pricing file, meaning that you've done a study about
Yes.
companies in your industry and what are the percentages that are being used.
Oh, okay, okay.
A full
Thank
benchmarking. Yeah. That's the local file. So they don't want to see your global master file. They want to see the local Chinese benchmarking that has been done for companies within your industry and sector.
And do they want like an independent party to do that stuff?
Well, it has to be done by a local Chinese party.
Yeah,
Yes.
yeah, I was gonna say.
Yes.
Not that
I mean, not that you're using
KPMG
KPMG UK to do a Chinese benchmarking,
Yeah.
right? It needs to be a local.
Just to say here, Christina, we have used KPMG in China, but everything is in English.
The contracts. Or
Yes.
what do
The
So the
agreement and the work.
that just needs to be translated into Chinese.
And that's it. Okay, thank you.
Yeah. Because what will be submitted will be the Chinese versions.
Okay, thank you.
Yeah.
I have a question of VAT. Is it quarterly or monthly or monthly?
A monthly.
What's
yeah.
the threshold? Like to reach that?
So monthly is actually for general VAT taxpayer, quarterly is if you're a small scale taxpayer.
And what's the threshold, after which you have to start?
Become a general VAT taxpayer. Currently, what we're noticing, there are a lot of different thresholds, but what we're noticing right now is if in a fiscal year you've hit a sales revenue of 5 million RMB, that your tax officer will give you a call and say you've hit the threshold, now you have to become a general VAT taxpayer. They won't look at it month to month, quarter to quarter. They just don't have the resources and the time. So we, for example, during COVID had hit that target and then were asked to implement general VAT for the following fiscal year. And we were notified around September, October. So we could still maintain for that fiscal year the small scale taxpayer rates, but then starting from January, you have to move on.
So it's on the rolling basis in the past 12 months.
They're going to look at the fiscal year. So you hit 5 million RMB. If your tax officer is organized, we'll give you a ring saying you've hit that threshold. Next fiscal year, you need to become a general VAT taxpayer. So any e-fapiaos issued next year will be at a 6% rate if you're doing services, or 13% if you're selling goods.
What was that threshold?
5 million RMB.
What the hell is that then?
But you're already a general VAT.
Yeah, why?
I don't know.
Why the hell are we?
I don't know. I don't know.
You're gonna have some fun. We're just gonna unpick what the heck's going on.
Well, so the issue in China is once you are a general VAT taxpayer, you can't backtrack. You
But you
are a
can't
general VAT taxpayer for life.
You
Yeah,
gotta kind of raise questions, how the hell we can set something.
yeah. I don't know what the decision-making process was at that time.
They
So,
were-
yeah.
I didn't even know
Yeah.
that there was this option.
so
So this
there
is
are
literally
options.
news to me right
Yeah.
now.
So if you are a small scale taxpayer, something that we recommend doing is doing simulations. So every quarter period, doing a simulation, are you hitting a threshold soon that it's going to trigger us moving to general VAT? And ask yourselves, do you want to become a general VAT? Nobody's forcing you to do anything you don't want to do, right? The question is just creating those simulation that you have that data and you have a decision-making point to decide, do we move on or do we not move on, right?
You need to design all these lovely models that we can then just use to
To
complete.
plug in.
Yeah, you just plug it in and then ta-da.
Every company is different though. It's very hard to do that.
But we just fill in.
Yeah, and then I've got a PayPal app and you can just download the Excel sheet, right?
Someone make a lot of money if that was just all automated.
It's not so automatic like that, unfortunately. A lot of it also depends on, we remained a small scale taxpayer for so long because I was cutting expenses and making sure I had no input VAT, right? So I was in a safe space at that point where I was protecting the business. It just got to a point where we organically just hit it, right? And we prepared for it. We didn't, but our assumption was we were going to hit immediately at that point. We didn't know it was going to roll over to the next fiscal year. Yeah.
But that's facing with VAT. I don't know how it really works, but in UK, because you do network, right, between the output and the input.
Correct.
Is it the same way? in
Yes.
China?
So you have a software system.
Yeah.
So when you are set up in China, you get a VAT software system and you input all of the e-fapiaos you have received from your suppliers.
Yeah.
You input that into the system and all the e-fapiaos that you have then issued is also in the system because you're issuing them from the system, right? The e-fapiaos. Then there's the calculations in there. And basically, if you're a general VAT taxpayer, you pay monthly. It generates it automatically. What is your liability? Right? The same for if you're doing it quarterly, it will generate it. Now, if you're a small scale taxpayer and you hit, I don't know, a quarter, I believe it's a quarterly sales revenue of 300,000 RMB, you're actually VAT exempt. Yeah.
But then I think the general practice is it depends on the nature of the business. If the business is engaged in the trade, which is not kind of a VAT sales related, whereas you purchase things with all the lots of the input of that. So it's more beneficial.
Yes.
To be registered as a VAT.
Right.
Same as that.
The issue is that currently with the times that we're living in, people try to forecast the amount of money they're about to make. And it's not becoming a reality. Right? The economy is down. People are not really hitting targets as they expect to hit targets. So, you know, they say, oh, we plan in I make it up now. We plan in June 2025 that we're going to, or 2024 that we're going to become a general VAT taxpayer. How can anybody guarantee that? That's why I'm saying do simulations along the way that you can check. When are you going to hit that point? And also look at upcoming projects, right? If you are predicting that you're going to bid on a project and that project is worth 2 million RMB, then you might want to become a general VAT taxpayer sooner rather than later. Right?
What's the VAT tax? Always it depends on the industry, but overall.
So VAT, as a general VAT taxpayer, VAT on goods is 13%, and that's on generally most goods. Probably about 80% of all goods is 13%. On services, it's 6%. Real estate. So if I'm I pay 11% VAT on my office rent. Logistics, I believe, is at 9%. So most freight forwarders will issue a 9% VAT. Those are the ones I work with most of the time. And then there's specific ones depending on really, are you clean tech or depending on that industry and sector. And I don't have those in my head. Yeah.
So like in the UK, as a small business, you'd probably maybe wait till you hit the threshold to get VAT. However, as a small business owner, I know that it looks better if I'm VAT registered, and I've essentially a little bit smoke and mirrors, but I maybe look bigger because I've got VAT on my invoices.
A very good question. It's nothing to do with image. It could very well be that one of your clients, because if you're a small scale taxpayer, you cannot issue special VAT. I'm getting into much more complicated territory now. Apologies. Wait, let me go back to that slide. I will explain it to you. So if
It was just
next one.
like the outside, whether it
No,
looks
this
better
one.
that you're paying.
So there are
general
two types of
VAT.
VAT invoices. You have the general VAT e-fapiao and you have the special VAT e-fapiao. Okay. When you are a general VAT taxpayer, you're automatically issuing the special VAT e-fapiao. Okay. When I receive that fapiao, I am able to deduct the VAT from suppliers. However, if my supplier is a small scale taxpayer and he only gives me the general VAT e-fapiao, I cannot deduct it. Okay. However, I can go to him and say, I'm sorry, I can't accept the general VAT fapiao. I need you to go to your tax bureau and have them issue me the special VAT fapiao. So even as a small scale taxpayer, I can still issue a general VAT. I just need to get an application from the tax bureau done. So there's that issue. There is not really an image thing where somebody will say, oh, if you're not a general VAT taxpayer, I won't work with you. That comes with registered capital. So if you work with state-owned organizations, government organizations, they may say, if your registered capital is not 1 million RMB, we won't work with you. But it doesn't reflect your VAT set. That reflects how much investment capital are you putting into the company. And if you're hitting 1 million or above, then I can work with you. Because there's a guarantee that you've got the money there, even if you've used it all up, that you are, you know, because you're liable up to that amount. So I have clients who've invested less because they just didn't need to. They were generating revenue very fast that they were able to maintain status of their company. But on bigger projects that they were bidding on, this was in the automotive sector, they needed to increase their capital. They're never going to use the money. They don't need it. But it needs to state on their business license that they're putting in 1 million.
Does it have to actually be that?
On the business license, it will be.
Otherwise, but do you have to have it in cash? Do they check?
No, no. It just has to state on. So on a lot of these projects, they want to get a copy of the business license with your CHOP on it as part of your KYC file. So, you know, the clients will do a due diligence on you. They will say, oh, we want a copy of your business license, put your CHOP on it, and then it becomes part of your due diligence file, basically, on them. And they want to see that on that business license, it states that amount. Yeah. But they're never gonna say, did the money actually arrive? I mean, they're not gonna, not that they're not gonna do. Yeah. Yes, does that make sense?
Yeah.
Just trying to
Just
remember my-
situations where.
Yeah.
Okay,
Any other
but-
questions online?
No, we have no more
Okay.
questions online. What we can do is we can kind of close down the
Sure.
online bits, and then you can stay around for a little bit longer.
Yeah,
right? So,
And if anybody wants a copy of the presentation
I always want to take a photo of dates.
of the dates, I mean, this is really rough, but sure.
I know, but if you want to write it up.
No, I don't. It's funny.
Should I go take a photo? I'm looking hard.
In that email.
Yes.
Okay.
Yes.
Yeah.
Well, actually, you don't need to because you will be getting an email.
Oh, there we go.
Yeah. After December 11th.
After the
Yes.
second,
okay, well, is it no one's had like an opportunity to ask more questions,
Okay.
so thank you, Christina.
Yeah,
and,
my pleasure. And I'm around.
Tea,
So
coffee, orange juice, snacks at the back of the room. Anyway.
thanks, Chris. Thank you to everyone online. If you enjoyed this episode and you'd like to help support the podcast, please share it with others, post about it on social media, or leave a rating and review. Now, can Woodburn help you? I am offering a free 30-minute call where we discuss the obstacles you are encountering on your China and/or Hong Kong business journey and how we can help accelerate your success. The link to my diary is in the show notes. I look forward to speaking with you soon.